First of all, thank Outlook for getting a dream panel together. That is what I told our co-panelists, leaders, practitioners. I have been observing and being part of the arc of development on green finance for last nearly 20 years. And so I do know, and the work has led my institution, which is Climate Bonds Initiative. Before that, I was working with German Development Agency. But all in all, I've had the pleasure and opportunity and honor of engaging very closely with the institutions that these leaders represent. And I was telling Dr. Tapan that I'm very happy to meet you. Usually when we have financing conversations, we have banks, we have TFIs, and insurance are the missing link that we have now. So it will be very good to hear from you also. I will just sort of outline how I wish to structure this conversation. We do have 57 minutes ahead of us. What I would do is just give you a couple of my thoughts in order to structure the conversations, and then invite our speakers over here to outline some macro level remarks, in their opening statements. And then I will go back to them and tease out certain specifics and perhaps also ask them some more questions which probably require us to push the envelope. That will probably get us to 60 minutes and hopefully not beyond it. Just to tell everybody that one of our speakers, Mr. Shaji, also has to leave, so I will invite him perhaps ahead of others in our conversation. Just to, I think some data points were set out before us, before we started the conversation. SMEs are the backbone of Indian economy. And not only do they contribute nearly 45% to industrial production, to manufacturing sector somewhere around 36 to 45%, they are also a major provider of exports and also employment. Nearly, I think, 110 million people are employed by SMEs. So it's like, if you talk about green finance, if you talk about productivity, if you talk about really increasing Indian competitiveness in industry, and not only industry, but also agriculture-related MSMEs, I think we're really coming down to the basics of it. In environmental terms, previously it was all, some data points were given. Not only they consume high level of energy and they emit, in an aggregate manner, quite a lot of emissions, but they also happen to be in the value chains of some highly polluting industries like steel, cement, fertilizer, etc., etc. The other thing is that they're also vulnerable to climate impact. So, it's not only in terms of supply chain disruption when an event strikes, it could also be in terms of chronic climate impacts, in terms of heat stress, which also impact all kinds of productivity, whether that is capital productivity, labor productivity, or material productivity for these entities. With all of this, while we have lots of policy statements, targets ahead of us, I would like initially to invite the biggest banker in the hall and in India to tell us that SBI has been doing a lot of innovative work, but how do you translate a lot of these policies into practical products and financing structures, specifically for MSMEs, and what has your experience been in terms of leading or increasing this finance to MSMEs? If you could give us a bigger picture, Mr. Tewari. Thank you.
Thank you, Neha, and good evening, everyone. Thank you also to Outlook Business and also Primus to putting this together, because MSMEs have been much talked about, and we have the leading policy maker, Mr. Mittal, sitting next to me. But in terms of the sustainability and greening of MSME, that's a kind of a niche topic. So just to give some context, like you mentioned, Neha, overall, this number of 20 trillion rupees credit gap for MSME has been around for some time, basis some 2021 study report. But for us, we have a book of almost 4.6 trillion as we speak, and growing by almost 18% for the last several quarters. So out of this, how much is on specifically green or sustainability? I think this is a big opportunity area. So there are multiple things we do with MSMEs. You mentioned about how do we create products. There has been a traditional way in which MSMEs have been assessed and which has come in for much criticism, which is a traditional way in which we used to do things by assessing a balance sheet and looking at inventory funding and all, maybe the bill funding, etc. This has now been, and this had its own challenges in terms of availability of financial information for the MSMEs to prepare those balance sheets. Then there was a collateral linkage, and those were all difficult problems for MSMEs, many of whom found it hard because there were one or two people only to actually do everything, including handling the bank and its requirements of financial statements, etc. With those background, I think we have all moved on thanks to initially to the Credit Guarantee Fund Trust Scheme, CGTSME as it's called, which enabled us to come out of the collateral requirement, because that used to be a bigger, very big issue for MSME lending. And let's also remember that MSME lending has been risky lending. The losses in MSME segment, because these are essentially weak units, dependent on a large unit for either supplies or for them to supply, so as ancillaries. So therefore, anything going wrong with the macroeconomy or with the larger unit impacts MSME, though their own management may be pretty good. So therefore, the credit losses in MSME traditionally have been upwards of 10%.
Above?
Upwards of 10%. This is a historical loss. If you look at the 7 or 10-year period, last 2-3 years have been pretty good because the overall macroeconomy and the larger corporates have been doing well. So with that background, we have now shifted through the credit guarantee scheme to move away from collateral, and secondly to a cash flow based lending. Now this again has been talked about, but it was hard to do without having an idea about the financial statements or financial requirements. So therefore, with the coming of GST, which has now made it available for us to get the sales data through GST and also the bureau data. So these two together have enabled this to happen. And today, State Bank of India, 1.5 years back, created what we call a business rule engine, BRE model as we call it, which is completely digital. And we are able to give a sanction here in less than 3 hours. And the only requirement then remains for our officer to visit the unit to make sure, one, that it is there, and secondly, to actually look at the factory or shop or whatever it is, to do a physical work, because a lot of the MSME still requires a physical approach. In addition to that, the sanction is completely digital, and we have seen such good traction in this that this book has built up close to about 40-50,000 crores in a matter of just about a year. So I think the future going forward, it has to be cash flow based. Based is the GST and other data which is available. And of course, the other thing which I want to point out at this point, especially in regards to not only the sustainability and green initiatives, because these are expensive interventions, whether it's a transition from, let's say, a coal-based or a wood-fired. For example, in Bombay, as we speak, today we have a situation where the bakeries in Mumbai have been asked to shift from wood-fired furnaces to a green furnace or electric-based furnace. And this is expensive. So many of them actually have been asking for support from the government, state government. Now, such interventions therefore require a cluster approach. And State Bank of India long back used to have a project in the 90s and 2000s where we used to study a cluster in detail. For example, the Bengal cluster in Firozabad. Similarly, the Coimbatore cluster for the pumps. And after the study where technical experts would be involved, we would identify the interventions needed and then fund those interventions through bank's own scheme. Now, over time, this kind of fell away because interest from the MSMEs, the overall infrastructure, and today I was talking to Mr. Mittal just before coming in. I think we do need a cluster-based approach again because interventions which are costly. For example, the leather cluster in Kanpur has a common CETP or the emission plant which cleans up the water discharge, etc. We need these in much bigger numbers. Otherwise, for each individual MSME to get the technical knowledge, to get the expense which is required. They'll work on very thin margins, very hard. So I think that way, this is something we are now engaged with. And the latest schemes, which Mr. Mittal will talk about, the gift and the spice and the Z rating, I think they will go a long way in motivating many MSMEs to go in for circularity, but these are again individual based schemes. So they would again need a lot of support for that rating itself, 50 parameters, needs a lot of support for the MSMEs to understand and actually execute it for them to get benefits. So I think it has to be a whole of system approach rather than one bank or one institution or one branch trying to do its own thing. We need this as for the reasons you mentioned, the contribution to GDP, employment, exports, all of this, it's a settled fact. So we need this. Thank you.
Thank you, Mr. Tewari. I will just follow with one thing because could you mention cluster approach? Because just an hour ago we were discussing this at another round table around green finance. So you talked about digitalization. You talked about cluster approach. So what I heard from you was that in terms of access to finance, I think there are many steps that have been taken. The question that, of course, comes is how is that finance also affordable for MSMEs? So, could you just reflect a little bit on that and what should be done? And where, in terms of the green sectors, are you finding opportunities? Because look at auto supply chains and OEMs, etc. Look at steel. You know, there is a large part of steel value chain which is MSMEs. But these are also areas where large corporates also are right now at a nascent stage of decarbonization. So, is there a much more thinking at a leadership level? How would a bank like SBI look at affordability and new sectors to finance?
So affordability comes in various ways. For example, I mentioned, see, one thing which we have to realize about MSME is the timeliness of credit and the adequacy of credit. I think those are much bigger factors than just the interest rate. If that was not the case, then MSME is borrowing from NBFCs at costs of 14 to 16% and sometimes higher wouldn't be happening. Many of them even go for unorganized finance, maybe one shouldn't call it money lenders, but unorganized lenders which maybe charge 18-20%. So therefore, availability of finance timely and adequacy has been a major issue. And that's why interventions like I mentioned about our digital intervention, which looks at the GST data, validates the sale data and gives a general percentage. Let's say this used to have the NAC committee formula long back, where we used to say 20% of the projected turnover will be given as a limit, such simple formula. So that the MSME also knows that this is the limit we are going to get. And of course, now with the coming of much better quality data, I think we have much better nuanced. So we have solved, or we are in the process of solving the timeliness and adequacy. Of course, it's still a work in progress because the credit gap of 20 trillion remains. Now, in terms of affordability, today this affordability also is covered to some extent by three things. One is the subvention schemes which have come in. The second is the waiver of processing charges, etc., which have been there for many banks. Of course, this is still higher than maybe what agriculture gets at this point of time. My sense is 10 to 12%, if that range MSMEs get, it's good enough for them. Of course, you can always argue 9%, 10%, but one has to make it sustainable over a long period of time. And therefore, once you look at the historical loss data, that's a difficult portion. Having said this, platforms like Treads, where all these 4 or 5 companies, which are platforms which are handling the discounting of invoices, I think is a great way because there the cost is much lower. It's between 7 to 9% and therefore much lower. And this used to be again a weak area for MSMEs where large corporates wouldn't pay them on time. And today with the discounting happening in a big manner, this number goes up everything and it's being bidded. So I think it's a very fair transaction which is happening on the platforms. So that way this cost is also coming down. So that's the landscape as far as affordability of finance for MSME goes. Now in terms of the interventions on greening, I think the biggest intervention, of course, remains the transition in energy. And therefore, solarization is a big initiative, which all of us are helping either with for the residential MSMEs, because many of them are one-person operations. And one has to remember, well, the overall population of MSMEs is upwards of 10 million, but 90% of those are micro, very small, single person operation. So for them, a rooftop solar from the PM Sorgar scheme is good enough. But there are others, larger ones, for which we have, for example, a Surya Shakti scheme of our own, where we fund upward to 5 crores, maybe more, depending on the need. And therefore, energy transition is the first and the major intervention which we have already done. It's again, as I said, work in progress because such a huge requirement. Second is in terms of discharge of waste and how do we clean that part, whether it's water or air. So there are again special products for that. It's again expensive. So therefore, that's why I talked about the cluster approach. And similarly, there are other interventions which make the circularity. So for example, the manufacturing MSMEs, you talked about cement suppliers, the others, steel, even steel, for example. If you can if you can use that effluents, because much of that also has heat and other gases, and heat them and put them back in the chain, the cost, energy efficiency goes up significantly. Many of the larger steel companies are doing that. So MSMEs also have these interventions which can be done with them. So there are multiple areas where we can work with MSMEs in terms of energy efficiency, circularity, cleanup, waste management, and so on. And we have a group company which also gives equity funding through the SBI Capital Ventures through its NEEF funds. The third fund is about to go live, about $285 million. So we have a lot of initiatives and areas where we can support MSME in the sustainability areas.
Thank you, Mr. Tewari. And, it's great to hear a banker, a finance specialist talk about circularity, go into technical details of environmental pollution. That is the combination that I think most of the financial institutions will come to when it comes to environmental finance. Quickly moving on to Mr. Shaji now. I know that you're also short on time, so I will take the opportunity to bring you into the conversation. Um, was it last year when NABARD came out with its climate strategy for ANR, which is what you define in agriculture, natural resources, and rural development. Give us a little bit of a flavor of that strategy. NABARD is also, by the way, I think the biggest refinancing agency, right? You refinance a huge lot of money. And how you've been looking at different instruments of green finance or thematic finance to really, greening the SME sector or rural-based SMEs or agri-allied SMEs. But give us a macro picture, and then, we would love to hear something more specific on MSMEs.
Yeah. So thank you for the opportunity, first of all. And being in agriculture and rural sector, of course, most affected by the whatever climate events happening, and they are also the cost of many of these, because if you see the data, around 13% of the global emissions are coming from Indian agriculture sector, and agriculture sector as a whole, if you see, around 30% are emissions are coming from the sector. We deal with rural, which includes agriculture plus other activities. In our case, out of the 9.1 trillion balance sheet size, when we took stock of our activities in terms of climate and related ones, we saw that almost one third is already confining to or actually, maybe qualifying for calling it as green assets. And going by that, if you see, we started with the agriculture and natural resources sector, which essentially is related to climate and resilience. We had our flagship program of watershed development, where we bring together people and actually desilt the area, make the conservation activities there, and help those people have livelihood in those areas and develop orchards, develop processing activities, and such other things. So that was one of our flagship program, and there then, we partnered with international agencies to structure it properly, and that is where our natural resources management program came in, where we actually did some exercise on blended financing early on, when the word blended finance itself was not there, where we actually gave grant plus loan to them, and also also the zero coupon, zero principal bonds, which we are talking about in terms of sustainability. We practice that without formalizing those such instruments, working with groups in rural areas. As we stand today, we recognize that for protecting the livelihoods of the rural people, we need to sensitize them regarding the emerging risks, including climate resilience, because of the climate events, the gross cropped area of the country may come down because of landslides and such other climate related events. So we need to work with rural communities to increase productivity. And once we work in that direction, we need to make sure that whatever modalities they adopt are conforming to the sustainability standards. So we need to green. It is said that almost three-fourths of India is yet to be made, and we need to be aware that once we go on building that, developed India, we need to build consciousness of climate also into that. So in the agriculture sector, first of all, we are trying to protect the livelihoods by protecting their incomes. For that, sustainability is an essential factor. We recognize this early on, and that is where our interventions in the natural resources sector is coming. So we also worked with climate resilient agriculture pretty early on. Now we have partnered with many of the international agencies like UNDP and also ADB in setting up data in climate resilient agriculture. Already we are working with 7 states where they are almost live. So we intend to expand that to other states as well. And and as you see that the agri stack which government of India is talking about, where the data in agriculture need to be in a proper form. The formats of that has been given to the state governments. If you see the agri and rural sector, most of the activities remain with the states because it is in the state list. The central governments can go lead broader directions and frameworks, but it is the states to act. So we need to have localized interventions with the state, and that exactly is what we do with the development of AgriStack, where we co-develop this. We give the management capabilities of NABARD in developing this AgriStack. And going forward, as we add more of such activities, then the verified data need to be there for demonstrating that whatever we are doing are climate proof or climate resilient. So the data proofing and also the traceability is what we are trying to do with the AgriStack. We are sensitizing the state governments for that. Then we are working with the rural financial institutions to have products developed for suiting their emerging needs. We are now in the process of digitizing the primary cooperative societies all over the country. Almost around 60,000 of such societies have been digitized. We have embedded elements of resilience also into this. So once we develop the software, we are aware that the software should be developed in such a way that it should be coming in handy for us to have proper database. So almost 13 crore of members, the farmers are there in that climate in that cooperative society network. So we also work with regional rural banks, and also we no, being a development financial institution, there was a mention about gap, credit gap is there, and access. So we have to now sensitize the rural financial institutions where they are dealing with massive number of small units. In fact, if you see that no, the rural financial institutions are the base on which the processing activities, the primary processing activities of the farmer starts, and for that, the access and the credit gap for that need to be addressed properly, and that is where we are working with farmer producer organization also. In fact, we see farmer producer organizations as SME units and work with them to develop their processing activities, because we are in the other side of creating demand as well as providing supply of financial products. So we work with farmer producer organizations, almost 10,000 of them we have already formed, and then we are putting them within a framework, and we act, in fact actually developed a credit model for the banks to act on. And when the banks were initially, because these entities are new without any digital footprints or credit background, so what we did was that our own subsidiary was financing. In fact, as of now, our subsidiary has financed close to around 1,500 of farm producer organizations, which is more than what any of the commercial banks have done. So that way we have shown that such entities are bankable. That is one. That is another thing which we have done. So we need to now create an ecosystem where the accessibility can be addressed properly. That is one. The second thing is that the credit products need to be developed in a way that it suits the intended beneficiary, and that is what we are doing. And we are also having credit enhancements in terms of guarantee. We have a subsidiary providing guarantee to the FPO loans, and also the animal husbandry loans. Animal husbandry sector is another sector which need to be addressed, and proper dairy infrastructure need to be there, and dairy societies are now, we are actually actually getting together small producers to form producer organizations in terms of either dairy society or in terms of a farmer producer organization, and then making them digital. We are giving a digital backbone to them, and so that the banks can work on that. They have proper the knowledge about those entities, their functioning, they have deep understanding. Accordingly, they can structure their products. So that is one activity which we are doing. Going forward, will be help co-develop lending products along with these rural financial institutions to diversify their asset portfolio as well.
Thank you. Just one follow-up question. Uh, I mean, agriculture and dealing with farmers also requires a huge amount of probably capacity building and transforming the mindset as well as the practices, right, and techniques. Is any of your funding going into those kind of activities also when it comes to greening? Second is, how are you accessing from international sources some concessional financings which you then pass on to your customers?
So we work with rural communities in terms of creating awareness through financial literacy centers are there. We work with banks to set up financial literacy centers. We develop curriculum for that. And also we provide actually digital infrastructure for these centers. In fact, the banking correspondent network, which is deep into such activities, including creating awareness and also providing financial services. We provide them handheld devices through a financial inclusion fund which we have. Almost around 15,000 of such handheld devices have been given to rural financial service in institutions alone. But for with commercial banks also, we identify those areas where such payment infrastructure need to be there, and also we work with telecom companies to increase the bandwidths and also increase the internet connectivity of such, so that these entities can banking entities and as well as the producing entities can make use of the digital infrastructure available. And then the digital financial literacy is one area where we are working closely with. Now we work also closely with RCTs in funding their literacy programs and also skill development programs. We have micro entrepreneurship development programs and livelihood development programs, which we run through RCTs and also civil society organizations to create demand and also develop skills for entrepreneurship. And internationally, we are one of the direct access entities from the Green Climate Fund. In fact, we are the first to provide Climate Fund access to some two projects in India. One is the with Tata Trust. We developed a solar rooftop project in Odisha, and also in Goa we did one climate resilient program with the Green Climate Fund. Right now we are working with the both the agriculture department and also the animal husbandry department and fisheries department to have a voluntary carbon market framework, to develop a framework for such activities, so that no players, it will be easy for them to identify the activities that they need to prioritize. And we also developed a green taxonomy internally for agriculture sector, which we have shared with the government of India, and which will be coming out as a sector specific interventions from the government of India as well.
Thank you, Mr. Shaji. Dr. Tapan, I will bring you in last because I think we really need to understand. SBI has spoken, even DFI, one DFI looking at rural financing and agriculture has spoken. There are some common themes emerging already. Data, capacity building, new kinds of ways, and finding out products which will actually enhance greening of MSME sector. 15 years ago, when I started working with SIDBI, we used to say what SIDBI experiments becomes the norm for the bigger banks, mainstream banking. When it was about green financing, whether it was the initiative on 4E, energy efficiency of MSMEs, and many other such initiatives. Mr. Mittal, you have recently taken over as the head of the institution. What would be your outlook when it comes to increasing the footprint of your products and deepening green financing for MSMEs?
Thanks, Neha and Outlook, for this opportunity. Let me start with a small episode. 2005, we borrowed 500 million from World Bank. It came with certain clauses and all. 6 months down the line, 500 million utilized. Nothing left. World Bank team comes, asks, where is the compliance? Where is the environmental and social guideline framework? And we all are blank. We all were blank at that time. What is this framework? This was just there in the agreement. Were we supposed to follow this? No, we signed it. So this 500 million, so we knew money. We just knew how to take this money and utilize on the MSME. We didn't know anything about. So that one step forced us to acquire those skills, train your own people on environment and social guideline frameworks, train your own credit officers. So we started in 2006, training our own people. And that's where we got into it. There were strategic partnerships with KFW, AFDs of the world. And that's how we started borrowing best practices in the other part of the world. How do you really go about it? And so SIDBI's officers, SIDBI's credit officers have been, you can say, empowered with this kind of sensitivities. They have been exposed to best of the technologies, practices in other parts of the world. Now, question is, how do we scale it up? We have been, as Neha said, the first to experiment with. And we have experimented with so many products, whether it was cleaner production technologies or environmental lines. So many things we have been experimenting with. But being an institution, it's important that it creates a multiplier effect. Otherwise, as a single institution, as a single DFI, whatever you do will remain confined to the pockets. You do something in Moradabad cluster or Rajkot cluster, or that's what we have been doing. But if you have to take it to the whole country, then multiplier effect has to be created. And for creating that multiplier effect, now the plans, what we are doing here is, we are partnering with institutions, banks like State Bank of India and other institutions. We are bringing them on the one platform wherein we can, offer best practices. The first of the question which has to be asked by the whole industry, banking industry, is what is green financing? Is there a common definition of green financing? Every bank adopts its own definition. There is no single definition of green financing. I call something, Mr. Tewari calls something else. So let there be some kind of a common definition in the sector, and so that MSMEs also know this is what is green, this is how they will take it further. Bring more and more institutions, not only banks, NBFCs and other people. Bring international funding. Shaji talked about GCF and all international agencies. So we are also an accredited entity and getting several projects through them. One of the projects which I'll mention about is getting risk capital in India, getting GCF money towards venture capital financing. So that's where a big multiplier effect is being created. Because when you have green focused startups, there are some people who will create good technologies and take it to a new level. So the multiplier effects becomes very prominent through the startups, through the development of new technologies. So we work with a lot of startups. In fact, in India, Avana Capital is one of the beneficiaries. They have assisted on about 14 startups in their sustainability fund. So this is one particular piece which we are working with to create a multiplier effect. And coming to the cost part of it, Tewari sir very beautifully added the dimensions, how the costs are being reduced and what should be an acceptable range for MSME. But a slight different take on that. For a MSME, the decision to borrow or not borrow for a green, it's a kind of a capital budgeting decision. He is almost fully leveraged. So if he's borrowing, he's taking a term loan or some kind of assistance, he has to bring his own contribution. Where should he deploy it best? In the green or in his own working capital? Where will he get his ROI? So this is somewhere, MSME takes that crucial call. And most of the times, green would be a victim, because day-to-day survival is most important for MSME. So that's where probably there is a need for we bankers or DFIs to bring out with, some kind of products wherein the capital of MSME is not blocked. and this particular product has not picked up so well in India, but we are still experimenting. This is about ESCOs and RESCOs. And these kind of innovations, if this come to the market, we need to create that kind of framework where an MSME need not worry about bringing its own contribution. He need not worry about paying an interest on the loan part of it. It's rather, there's somebody coming and then offering the solution and sharing the booty. So probably this is something we need to work more on this and then bring to MSMEs. MSMEs, I was just reading today a quote. They say sustainability is only sustainable when it is commercially sustainable. If any kind of green we suggest and then we tell them, Baba, it's good to have, but so we need to talk to MSMEs in their own language, and that language is payback. How many months, how many years, and how much of your capital is blocked. So probably this is something what I say is this, because you asked what's going to be focus area. So probably this is going to be focus area where we communicate better with the MSMEs, show them this is what can be done commercially, and then this is what you won't block your capital, and it's also beneficial to the environment, rather saying it's beneficial to the environment and then you come here.
No, I think that's a very important point, right? I mean, communicating the obvious is probably the most challenging task that we see. But you mentioned also about that the main benefit you see from some international funds, concessional funds, is to actually put that as risk capital. So in terms of capital stacking, is that the only benefit you see, or is there more to multilateral development banks or organizations like GCF that you actually see? How's that working out, or how you would like it to work out also?
No, so, as I said, one is the best practices. So you come to know what has happened in other part of the world. You get exposed. What were the policies? What were the technologies? How did it happen? You learn from that a lot. When you're borrowing from AFD and other people, the money doesn't come cheap. It doesn't come cheap. So looking for a cheaper resource, it's something the banks are not really targeting at that. And in fact, MSMEs also should not look at that. They should do more of a return analysis. That's what they should do. But GCF and other the funding we have got, it's about 200 million funding, which has to be leveraged 4 times, and then it becomes a 1 billion facility. It's a cheaper resource and it's a blended finance. So the new instruments are being brought. It's another blended finance, and wherein the benefit will have to be passed on to MSME, just to incentivize them to go for it. But this is coming in the form of blended finance facility. Bankers are pass-throughs here. So in my opinion, it's not just about interest rate, it's also about the best practices which we come to know. And I'll rather go for affordable, or when the cost not being higher than the domestic sources, and the best practices. If these two come together, probably we can do a good job.
Thank you so much for that. I will now turn to you, Dr. Tapan. You have heard about financing for green, and greening of MSMEs, to my mind, would also be making them more resilient and more risk-proof. But talking about really the physical impacts of climate change and insurance sector, what, in your outlook, would be the kind of things that insurance companies like you could do to risk-proof MSME expansion and financing so that they can remain competitive and come out better in terms of shocks?
Thank you, Neha. It's such a pleasure listening to all the bankers. I think for me, it's a deep learning experience. I thank Outlook for that. But let me talk about experiences, and I heard Mohit speak about best practices. As the director of Indo-German Chambers and a chairman at one point in time, I have the privilege of visiting Germany and meeting a lot of industries there. And one thing which came out very clearly was the Mittelstands, the SME, MSME as we call them here, and the entire ecosystem. While Ashwini spoke about cluster approach, it is still restricted to a particular industry and a small cluster. But I would see a whole ecosystem, the way they support the SME, MSME. If India has to become a superpower, if it has to become a developed nation, in my view, it cannot if the SME, MSMEs don't play a very big role, and the entire ecosystem is created to support it. So we're not doing a favor to SME and SMEs by putting together thought process or looking at a silo approach. When I talk about ecosystem, even the education system in Germany, the dual education system as it is, creating of the requisite expertise and skill sets for having a constant flow of talent pool to the SME, MSME is very critical. Or look at the Mittelstands, they are globally present. No? We heard Ashwini speak about the impact in terms of the economic upside and downside, and sometimes no, they would not be able to sustain it. And they have chambers of commerces across the world, and how they ensure that a company, a small family company in Germany, when you go and see them, is actually a global company all across, something like a Faber-Castell or something. It's so interesting. I've been to the factories, met the promoters, and how they spread across the globe. The entire ecosystem ensures that they sustain and they become very powerful. And I think one of the biggest reasons of success of Germany as an economic powerhouse is their SME, MSME, or Mittelstand, as we call it. So I think we should be very clear that when we talk of SME, MSME, we're not talking of just silo-based approach. It's a full ecosystem creation. I'm very thankful to Outlook Money to bring this topic up for conversation and see how do we bring into the policy advocacy of the government to look into it. Now, coming to insurance, while Ashwani spoke about failure due to economic reasons, but I do not know if he has data on this. If I look at SMEs, 83% SME, MSMEs are not insured at all. Now, 54% of SME, MSMEs are actually on the rural side. And they're 95% not insured, which is fair. The one which are insured also have a coverage which is just 63% or less than that. Now let us see the impact of what happens when you have such a position. And that is why when the banker is sitting next to me, I'm not sure if they really do an assessment of their NPS and the impact of it. At least 25% of SME and MSMEs, when they face a catastrophic loss, they're not able to come back. Now that are data points from insurance perspective, which would have a huge impact on the NPS. And if 10% is what Ashwani mentioned in his talk, I'm very sure quite a bit of it is because of the failure of getting an SME well covered and when an impact happened. Now let's look at when in Uttarakhand happened, flood. The loss was actually more than the budgetary allocation of the whole Uttarakhand state. You are aware about it. Now if you have 83% SME is not covered, which means they go down and the budding entrepreneurs just disappear overnight, and 25-30% of them not able to come back again. Let's put that into monetary consideration. What are we talking about in terms of numbers? It's a huge number. Now, do we see flooding happen? We see it happen every year now. Be it at any part of the country, it's happening continuously. But we're not trying to quantify the impact of it. As per the World Bank study, 2% of India's GDP is actually down because of this. It's so interesting. We are struggling to say that we are one of the fastest growing economy at 6 to 7%. We should be growing at 9 to 10% to have the Viksit Bharat dream at 2047. We are always saying that. But the beauty is we're not even trying to address the leaking bucket, as I call it. A 2% loss to the GDP is happening because of the coverage not being there. It is just getting ignored. I've spoken of health also in my previous talk, in which is about 1.5% happening there. Let's put that aside. Let's talk of pure loss to GDP of India at a 2% loss in the current scenario, because we're not able to provide adequate cover to it, in terms of a policy matter. We're not able to talk to an entire ecosystem, right from labor to putting a global market at the disposal of SME, MSME as a country. In my view, it's a very important topic to be looked holistically, to plug in all these points together, to see an impact and take our country to be a Viksit Bharat.
Thank you so much for bringing that missing dot in the conversation. Why would you think it is not happening? And what are companies like yours doing in terms of some innovation in this space?
Okay, now let's look at what we're offering, and we've spoken to the government also. We have a lot of meetings also. Now there are certain things which is also called parametric, and Nagaland government actually started it. Now we spoke to some other governments. So you actually can have trigger point covers. So let's say you can't do individual covers. So as a government, let's say if they say that we cover all our SME, MSMEs, and if the rainfall exceeds, let's say X, then the claim payout happens. There's no need for assessment, which means within 24 hours, everybody in that PIN code gets what has been agreed upon. It goes to the bank account directly. It doesn't. We don't even have to assess it. Now, we also have spoken to the global reinsurers. They're ready to back this up. They're very keen to see how do we do that. We're also talking to the regulator to see if we can get cat bonds to India. In US, one of the biggest reinsurance facilities to the cat bonds, which is put together. India doesn't have that provision, right, from regulatory requirement to putting it together. We're trying to see how do we put that together. Most of our banks in India are our partners. We have 240 banks. We're, in fact, one of the largest bank partner in the world as a company by Allianz. And through them, the SME, MSME, we try to target. I'll give you an example of one of our oldest partner, J&K Bank. In 2014, you had huge floods in Kashmir, in which 14 feet of water. I'd personally gone there. Nearly everything was submerged. So I told my team that once you know everything is submerged, what are you going to waste your time figuring out what the loss is? Just take out the PIN code and just issue checks because it's destroyed. And they have a 98% penetration on the SME MSME. And actually, the chairman of J&K Bank went on record saying the NPS did not happen in spite of such a huge flood event. It was because of the huge penetration of insurance that was there and all the claim payment triggered off. And that ensured it did not fall down. So you actually should study instances like this where actually companies have been able to ensure that the economy rolls back much faster. In fact, the money we paid was much more, 3 times or 4 times the government paid in that place. And we paid it in 3 months' time of the incident. So I think this is how you see the impact that you have in the economy in terms of plugging everything together. So the ecosystem creation, solutioning are there, putting it together, putting an end-to-end ecosystem in terms and accepting the fact if India has to be a global powerhouse, the SME, MSME have to be globally present. And Germany would be a good example to study and how they have built that together.
Yeah, thank you. I will request the audience to start already thinking of questions because we'll have some time to bring in your questions. Because before I open the floor, I'd go back to Mr. Tewari now. Two things. One is, of course, since we just heard from Dr. Tapan that risk, climate proofing your portfolio would be so incredibly important. Are you seeing some kind of bankable pipelines in terms of adaptation finance coming through, or what needs to be essentially done by, say, or what are you doing within SBI to get this thing, out there in terms of financing?
So adaptation is a very early stage. I mean, most of the effort today is on transition finance. Adaptation has so many dimensions. Like one Dr. Tapan mentioned, if a particular area is regularly flooded, insurance alone won't work. It may work the first year, the next year the premiums will be unaffordable for everyone. So just to take his point forward, yes, it is important for us to insure all the MSMEs and all the other units which are exposed. But I would argue that after this is done, today the policy is the same, whether you insure a house in Kerala or you insure a house in Uttarakhand, house insurance policy. It has to move beyond this to actually say that, okay, Kerala is more exposed to floods, so therefore more flood insurance, less of maybe earthquakes, but Uttarakhand should have more of landslides and earthquakes. Now that nuance, etc., is such a requirement of climate finance, which we are still, I think, at a very early stage. And then linked to that is the building codes issue. We are not even looking at that today because we think the map is approved, that's enough. But tomorrow, insurance will become unaffordable. It's done so in the US. The flood insurance, had the government not been funding, nobody can afford it today. So therefore, the insurance coverage is a good starting point. But I think the adequacy of that insurance and the customized outfit of insurance, depending on the respective physical risk, is very, very important. And then it has to go beyond of prevention. Today, when we look at the cars, you say a red car will attract more insurance simply because it's flashy and people may overspeed. Now, same things start to apply to all the other climate risks which we have. So this is about this. Now, as I said, adaptation finance, very early stage. In fact, NABARD and all will probably be looking at this because agriculture is clearly exposed much more than many other sectors. However, in terms of what we can do about all of this, insurance we are working on. Because clearly we're having those conversations with the insurance companies. We are looking at sectoral things, looking at a customization of it. In fact, we have mapped our entire portfolio PIN code wise to the climate risk exposed and the loss history. And now we know which part of the country is exposed to what and how should we insure. The next phase of the conversation is talking to all of them and saying, can you give us a customized insurance? So long way to go. The risk needs to be covered. I completely agree. We had the example of Kerala where 20% of a Kerala-focused bank that credit portfolio, 20% of it in 3 districts got damaged. I'm not sure they were covered well.
I'm very conscious, Mr. Shaji, you might have to leave, but would you like to say anything before you leave or,
So we have talked about some sort of a credit enhancement or giving cushion reducing the credit costs and such other things. So now we are working with various entities, not only with financial institutions, but with research stations and such other things, where we can develop varieties of agriculture crops which are resistant to such shocks, including drought resistant varieties and all. So we are working with Krishi Vigyan Kendras for propagating. So already a lot of research have been done, but then propagation of that need to be there. And then we also work with the district bankers bodies for developing the scales of finance suiting such advanced practices. As I said, all these things, if it can be, where these services can be given at reduced cost of access, not only on a cost of fund basis, but on a cost of the customer or the borrower to access that. For that, a lot of technology interfaces need to be there, and we are working with rural financial institutions for common credit infrastructure for such things. We are leveraging the capabilities already developed by the PSBs. In fact, we are looking at the practices, because these smaller entities which are dealing with more prone people or more vulnerable people, they need to be given top of the end services, be banking services or other services. We should not neglect that, because they may be individually smaller, but collectively they are a significant player in the economic development. In fact, the idea of Viksit Bharat, without equity in growth, Viksit Bharat can't be brought in, because the one part of India is growing very fast. The rural part, which is almost two-thirds of India, is growing little slower. So now, if you see, because of various interventions, right, from the financial entities as well as other entities, if you see the growth in demand in rural areas is almost equal to that of credit, almost equal to the urban areas. That means that they are getting to catch up. But then we have to fast track. That is on a smaller base they are catching up. But we need to significantly improve the per capita income of these people. For that, we are working with credit institutions as well as other institutions to provide them a bouquet of services, not only financial services, but advisory services and such other services as well.
Mr. Shaji, thank you so much. And if you do, yes, thank you so much for this. Yes, thank you, thank you. Till now, what we have not yet talked about is every panel or discussion that we have is policy should do this or regulation should do this. It's definitely something that I would, like to tease out some finer nuances of with all of you. But it does seem that it makes a huge commercial sense by itself for all of you to be really looking at MSME financing and green financing. But going back to now some policy related question, again, Mr. Tewari, because Mr. Shaji had to leave, I wanted to ask you, when you just said that, adaptation finance is right in the beginning. See, Reserve Bank of India has come up with some kind of, intention for financial institutions to look at both climate mitigation as well as adaptation. You would have to look at it in a much more forward-looking manner. And this work that RBI is doing, could you just sort of also tell our audience what is the kind of work that a financial institution like yourself is doing so that the greening of finance can be much more mainstreamed?
So at this point, the RBI has come out last year with, or maybe a year before that, with the climate risk framework, under which all institutions have to report the exposure of their portfolio to the climate risk. And that includes emissions, the physical risk, and multiple other data points. The lens there is the risk from the climate to the portfolio. And therefore, the next step, once the reporting starts to happen, maybe from this year, the next financial year rather, when the reporting starts to happen, then the obvious next question would be, since you are exposed, how do you mitigate this? And generally, the regulator in such circumstances asks us to provide more, which means you have to set aside part of your profits towards that risk which we are exposed to. While that is a good thing, because actually we are exposed and we have to mitigate, like Dr. Tapan mentioned, with their insurance and maybe other instruments, but the risk remains there. So therefore, that is more from a prudential lens, which is the risk and therefore the provision. In terms of finance, the RBI came out with a green deposit framework, which unfortunately hasn't taken off because nobody today would want a lower rate on a green deposit because there are compliance costs of audits and assurances which are attached to this. So it hasn't just taken off. For a bank like ourselves, such a large bank with 51 lakh crore of deposits, our green deposit portfolio is 82 crores. And we're not proud to say that. But it's just that whatever rate we have set, to account for the cost of it, people are not interested. So how do we make the green deposits or green instruments more attractive to the, on the liability side is a key question. And I think unless we give some dispensation to banks, we've been talking about this, can we have no CRR or no SLR on green deposits and therefore bring down the cost a little bit. I think that's one way, and therefore a policy intervention is needed here. How do we reduce the costs? I think those are some of the things I would say.
Thank you. So, how do you incentivize green financing? You know, I think that is what the note that you left on. Yeah. What would you expect? And this is a question to each one of you. You're sitting here. There is, of course, there is a policy expectation, clear signaling. We heard that taxonomy would be a great step forward in order to make at least the pipelines visible. And of course, pipeline creation itself is a task. So we all have to work in that direction. But let me come again back to you. What would you expect, say, the policy regulatory ecosystem to do so that insurance sectors can both invest in such projects and also better insure?
Investment, I don't think the issue. Most of the government bonds, in fact, if you look at 60% of infrastructure money, government is insurance money only, which comes in. So if I look at it, and I just want to take forward Ashwini's talk in terms of US, and Ashwini has a lot of experience from US. He's headed the bank there. In US, you have territory like Louisiana governor, he met me, he was talking about the uninsurable part of it, or the Florida we saw, and the government steps in. But solutioning of that, if you look at the UK market, where you had floods, there the government insurance companies work together to ensure that they figure out what are the losses happening using database, figuring out how can they protect it and how can they make it safer over a period of time, which comes together. So, and that became a very big successful model. Australia is picking it up. I think the collaboration of the government, insurance company and bankers along with data put together, and that's why I spoke of the ecosystem of putting it together. You already have success stories happening in different parts of the world. Some the US are still pick it up, the government is still funding it, but that funding is not efficient. So imagine, let's say insurance companies stop insuring. Will bankers give financing there? They will not. The whole state and the whole region will just dry up overnight. People don't realize that. It's a vicious cycle. If it hits the negative one, it can disappear. So before it starts there, people have to start seriously thinking about how they put that together. In terms of the regulatory and the government thing, regulatory, as I mentioned earlier, the CAT bonds should be allowed in here. From the government perspective, I think there should be mandatory insurance for SME, MSME, and home coming in terms of the way it is for motor insurance, because the impact that it has, be it on the economy, and in US you have it. You have a mandatory insurance requirement for your cyclone, floods, and earthquake happening there. It makes a huge impact in the economy also, and the losses can be taken care of. And obviously, as I mentioned, at state level, they can look at parametric insurances. That would actually, on a large basis, offset some of this risk which is there. Thank you.
Mr. Mittal, over to you. Sitting with your partners on both sides, what would you like to happen? What will you initiate? And what, in terms of policy signals, are you absolutely waiting for?
You know, they say, what you can measure, you can manage. Okay. So I can say SIDBI has a green portfolio of, let's say, about 11,000 crores. And a major part of 30% of that is solar. And out of that solar, 25% is IPPs and 75% is solar rooftop. So I have these stats. Why? Because we have been following a green definition and then measuring it also. Now the question is, at a sectoral level, are we able to measure this? Can this data be aggregated at some place? And then you have a policy for the nation, where you know what is the credit and the carbon intensity of the credit. The each rupiah or the crores we are spending and we are giving as a loan, how much of carbon it's generating. So it's something very important at this stage. If it has to be driven through a policy, it's very important that we measure it. A large sector, they're able to measure, they're able to find it out about their plants. But for the MSME, for the small company, for the banking sector, this is a challenge. So I would advocate here, some kind of a there are some private sector initiatives which have come, but they are working only with the large corporates, wherein they are measuring their carbon footprinting and giving them solution. They have come in the startup space. But something of this sort has to happen for the MSMEs also, and then banking sector should also measure its own carbon footprint. Once they do it, after that there would be comparisons possible. There would be data dissection possible, and then which geographies, which sector, which bank to work upon, and then make effective policy decisions.
Thank you so much. Time's up, we have been told. And while I would have loved to open this discussion to the audience, but I have been instructed to close, we have to give a big round of applause to our panel who spoke frankly and straightforwardly on how to make green financing accessible and affordable to the MSMEs. Thank you so much.